Now, as of recently, I've been talking quite a bit about the fact that I personally have been investing into higher than average yielding dividend paying ETFs in order to get my dividend monthly income up as fast as possible in my long-term portfolio, as you can see right here, but in a safe manner. And this is because even though dividend income is very important to me, I want to invest in different dividend paying ETFs that are going to give a positive total return, a substantial total return at that, long-term into the future. Now, in this video, we're going to go through and I'm going to share with you exactly which 5 high yielding dividend paying ETFs are my favorite as of right now, and which ETFs have been helping me grow my dividend income at a faster rate than ever before since I started investing. But along with that, I'm going to share with you exactly the total return of every single one of these investments and prove to you that every single one of these investments, at least historically speaking, have been amazing so far. So if you want to see which 5 ETFs these are, go through them with me. Make sure to stick around, drop a like down below, and let's get right into the first one. I have some huge news for those ready to get serious about their dividend investing journey. I'm opening just 5 spots for one-on-one investing mentorship from me. I am a self-made 7-figure dividend investor who earns just shy of $7,000 per month in dividends at 31 years old. With this mentorship, you'll receive things like stock ideas, stock alerts when I buy and sell positions, access to my entire portfolio in real time, and I'm even more than happy to review your portfolio. You'll also receive my custom dividend tracker and A to Z dividend investing ebook for absolutely free. Like I said, this is only for 5 investors ready to take action, so don't miss out. Now, the first dividend paying ETF that I've been buying a decent amount of as of recently and has definitely without a doubt been helping my dividend income grow at a very, very fast pace is none other than QQQI, or the NEOS Nasdaq 100 High Income ETF. Now, this ETF has only been trading since around January 30th of this year, so keep in mind we don't have all that much data to go off of, but at least so far in the max time frame, this ETF is more or less flat. It's actually down around 2% since it started trading, but of course, to be fair, this is just price return. This, of course, does not include the dividends, which is very important to mention because QQQI has been paying massive dividends ever since this ETF started, paying around 59 to 61 cents on a consistent basis, which annualizes out to around 14-15% yield, at least so far. But like I said, this ETF is relatively new. Now, because of the most recent pullback in the market, this ETF's total return has actually dumped quite a bit. Although to be fair, since inception, QQQI, even with the most recent few bad days in the market, this ETF still has a total return of around 6%, which is positive. It's not the best total return, but keep in mind this ETF has only been trading around 0.48 years, so it has a lot of ground to make up for. And for an ETF that yields a 15-16%, it has a total return and could definitely be an ETF worth looking into. For me personally, out of all the ETFs we're going to go through in this video, this is probably one of my smaller holdings, and that's just because I personally think that there's some better options across the market as of right now. But speaking of NEOS, there's another NEOS ETF that I've been buying, and this one like crazy as of recently. I'm talking about SPYI, or the NEOS S&P 500 High Income ETF. Now, I've talked about this ETF sort of ad nauseum at this point. I've shared the fact that I like this ETF quite a bit. I'm a huge fan of things like JEPI and JEPIQ and different cover call ETFs that track the S&P 500. Only in my opinion, SPYI does it all, but does it even better. And like I said, I've made videos about this one in the past. Go through my channel and check out some of them if you haven't already. Now, when the 1-year SPYI is actually in the red, again, due to the most recent drop in the market, we are getting some volatility and finally getting some buying opportunities, which I don't mind whatsoever. Year to date though, SPYI is up 2.2%, and on the max time frame, this ETF is once again basically flat, up around 1.44%, and this is over the last, say, 2 or so years. Now, SPYI doesn't have quite as big of a dividend comparing that to QQQI, but it does offer a 12% more or less trailing 12-month dividend yield, which has paid a consistent around 50 cents more or less every single month since its ETF's inception, which has been amazing for my portfolio. Not to mention a side note for those SPYI investors watching this video, just like myself, the most recent dividends have even been getting a little bit bigger. The biggest dividend from the entire year so far was just paid out in July, which was awesome. But what is a high income ETF even worth if it has a negative total return? Well, so far, SPYI, at least over the last 1.9 years, has a total return of around 22.72%. So even though this one has more or less traded sideways, over the last 2 years, this is annualized out to around 11.35% per year, which is not bad whatsoever, especially for those dividend income focused investors out there like myself that are looking to use part of their portfolio to generate a ton of income on a consistent basis. And this, along with many other reasons, is why I've been buying so much SPYI as of recent. Another one of the super ultra high yielding ETFs that I've been buying like crazy as of recently, this one I've been buying quite a bit of shares of also, is SVOL, or the Simplified Volatility premium ETF. Now SVOL on the 1 year is down 3.1%, year to date down 2.5%, and on the max time frame, this ETF does actually break my golden rule. I don't like to buy into ETFs even if they are super high yield, and this is if they've decayed on the max time frame, and SVOL is down around 13-14%, so you might be saying, well, that definitely breaks your golden rule, and it does, although ever since about September of 2022, SPY is more or less traded sideways or even up a little bit, so I'm giving this one a chance. Again, compared to the rest of my portfolio, this is still a small investment, keep in mind. Now, even though SVOL is down on the max time frame as far as price return goes, this ETF has a trailing 12-month dividend yield of around 16-17%, which is definitely made up for the loss of 1 or 2% long term. Or to be more specific, investors can sort of assume a 30-cent dividend more or less every single month for every single share of SVOL they buy. At least that's going off of the previous cadence, and that's what I've been receiving over the last 6 months that I've been gathering more and more shares of this one. But like we said, we need to backtest every single one of these ETFs and see what the actual total return, what the actual average annual total return is. For SVOL, even though there's some decay, those massive dividends have made up for it. 37.51% total return over 3.2 years, or around 10 or 11% on average, which is honestly perfect. Not bad whatsoever, especially for a higher yielding option like this one. Another ultra high yield that I've been buying a little bit more as of recently is another newer one. I'm talking about FEPP, which is up around 1.6-1.7% as far as price return goes. But just as of recently, this one has also fallen off a cliff, offering a few dollar discount, and this is just compared to the last few weeks. Now, FEPP is green as far as price return goes, and on top of that, north of a 15% starting dividend yield, FEPP has been paying a consistent $1.15 up to a $1.20 dividend consistently since this ETF started. Now, as far as sort of alternative investments, this is another one of my favorites. Definitely look a little bit deeper into this one if you haven't already. I've made videos about it in the past. This ETF has a lot to offer, especially if you're interested in having some exposure into FANG or things of that sort. Of course, what does FEPP actually return for investors? Has it lost money? Has it gained money? Well, at least over the last 0.79 years, FEPP has an annualized gain of around 20.84% or a total return of around 16.44%. So once again, an ultra high yielder that at least up until this point is offering a positive green return, which is amazing again for those investors looking to add some income generating machines to their portfolio. Now, the last one that I've been buying as of recently, this one sort of goes without saying. I think we all know what the outcome of this one's going to be, but it's JEPIQ, the JP Morgan Nasdaq Equity Premium Income ETF. I've been buying JEPIQ for several years now, and just as of recent, during this most recent dip, where JEPIQ is finally trading around $3 off the most recent highs, I've been grabbing some more shares a little bit more aggressively. Now, JEPIQ on the 1 year up 8%, year to date up 6%, the max time frame up 7.4%, but since around December of 2022, this ETF has been trading upwards a lot faster than any other higher income focused ETFs across the market. Now, even with that awesome price return, JEPIQ is still offering around a 9% trailing 12-month dividend yield, which is insane considering again how much upside this ETF has had, and it's been paying roughly about 40 cents more or less if you want to average it out to investors on a consistent monthly basis, which isn't the best highest yielding income focused ETF in the entire market, but again, with the amount of upside JEPIQ has had, I think it's 100% fair. But has JEPIQ actually made money for investors or lost money for investors? Over the last 2.2 years, investors that bought into JEPIQ would have a total return of around 28.24%, or an average annual total return of around 11.81%. So yet again, just another one, another income-focused ETF that's not only been generating a ton of income for investors consistently, but on top of that has a total return, which is not only positive, but positive pretty much in line with other high-quality stocks or ETFs across the market. So those are the 5 higher-yielding dividend-paying ETFs that I've been buying as of recently, again, some more than others, and as you can see right here, it's pretty clear. I would never make any one of those single ETFs a large portion of my overall portfolio, but utilizing higher income-focused ETFs to get your overall dividend income to a goal that you personally want to get to, especially if they're safe and are offering a positive total return, I personally do not see anything wrong with that whatsoever. But now lastly, most importantly, I want to hear from you guys down below. When it comes to every single one of the higher yielding ETFs that we talked about in this video specifically, if you could only buy one for whatever reason, which one would it be and why? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.